Hello everyone, it is Sterling here from Day Trading Forex Live, and I am back for the October month-end review. These are coming out way late. I have been in the process. I've kind of backed up until December this year, and then I took half of December off, as we always do every year at DTFL. We take the last 2 weeks off. Then I knew I was going to get a new computer set up, and so I held off doing these videos until I could record them in 1080p, and that's what I'm doing now. I want to start doing these in 1080p. I'm actually redoing the course as well in 1080p, but that's why these are coming out so late. So I will try and rapid fire October, November, December, and January, since we're coming to an end on January, just to get into October right away here and go through the results just as a recap to October. Up to October, we started these videos in May of 2015. Up to or through September, we had a plus 328% compounded gain. That's just trading two pairs. It's not in reference to if somebody were to trade, 4 pairs, 6 pairs, 10 pairs, which the strategy being that is very, it is not time intensive at all because we only trade from pre-selected points. Trading many pairs is something that can be done if somebody so chooses to do so. But in strict reference to the euro dollar and the pound dollar, which is what these reviews are all about, that was a 328% compounded gain through September. October, which is the month we're going to cover right now, was a 8.5% gain during the month of October, and that brings us to a total compounded gain of 356%. 328% plus 8.5% brings you to 356%. So again, sitting at 356, and that brings us through October, and then you'll see November, December, and January coming up here shortly. Still not a lot of trades on the euro dollar and pound dollar. That's probably why a lot of members are branching out and trading, 4 pairs, 6 pairs, 8 pairs, because we've been seeing all through 2016 a big reduction in the number of trades that we've seen on the euro and the pound. And October was really no different. Of the trades that we had a 66% win-loss ratio, and every trade starts out with an actual reward or a reward to risk of 2 to 1. So, 20 pip stop, 40 pip take profit, 25 pip stop, 50 pip take profit. Because you start out with a 2 to 1 reward to risk ratio, that doesn't mean you're going to actually end up with a 2 to 1 reward to risk ratio. I think that's pretty well common sense, but just to go into what actually matters, and that is the actual reward to risk. What do you actually end up with at the end of all your trades? What's your true reward to risk at the end of your closed trades? And with that 66% hit rate, not only did we run a 66% hit rate, which is a pretty good hit rate, it's statistically above our average in general, but 66% hit rate with the most important part, in my opinion, and that is the actual reward to risk of 1.56 to 1, or if you're rounding up, 1.6 to 1 on the reward to risk ratio, which is a great reward to risk ratio. And when you combine that reward to risk ratio with especially for a day trading strategy, for daily charts or swing trading, that's probably a lower reward to risk. But when you combine that with a positive expectancy, a positive win-loss, that gives you a strategy that tends to have smaller drawdowns, tends to manage through even tougher times pretty well, and that's what this strategy does a very good job of. So let's go ahead and get through today's or October's review. I will drag over the daily market previews as always, because the levels I'm going to talk about on these trades setting up are pre-selected levels. They're selected hours in advance, often at least 2 hours in advance. Generally, if the daily market preview comes out at midnight, our trading hours start at 2 a.m. Eastern. So if you're trading the European session, that's 2 hours in advance generally, as an average. If you're trading the New York session, then you're talking, 8 hours in advance, the levels coming out. So first trade that we had was on the 4th of October. It was a euro dollar trade, and it was a long setup. The level that we had was 1150. And what happened, the original level was 1158, and so I'll walk through why that dropped down to 1150. I'll first drag over the preview, as you can see here, and as you can see to the downside, we only had one level, and that's one spot, 1158. So if we look at 1158, that level was broken prior to the start of the New York session, and we came into that level here, and it did produce a break of that level. We got a break, and we did get a confirmation back up. But the confirmation that we had was on this candle, and that candle would have been after trading hours. It was between that 6:30 The entry would have come after 6:30 a.m. Eastern, and we don't trade between 6:30 and 8 o'clock Eastern, so that's why that first setup would have been invalid. What we did get, though, is we did get a new level created, and once we have a minimum push, obviously there's other criteria around level selection than what I'm about to talk about, but the minimum criteria we use is a 30% of the ADR push from whatever level it happens to be turning from. In this case, this was over that 30% minimum. When we got the push back into it, because there's no other level in the area, anything that's over that minimum criteria is a point we're going to use. And at this time, we were extended beyond the ADR, which always puts us in a situation where we're more aggressive anyways towards the reversal. This is actually a room setup as well, so we were in the live room at the time we took this trade, being that it was the 4th of October, and the 4th of October is a Tuesday. So when we got the confirmation on this, you come in, you get your stop run candle here. Next candle doesn't confirm, but it opens and closes below the manipulation point. So we have a rule that states if you get 2 consecutive candles that both open and close the manipulation point, the trade is no longer valid and the level is no longer valid. So you get 1 candle opening and closing below it. That means the next candle has to get back up above that level or the trade becomes invalid. The next candle does confirm. It closes above the body of the previous candle, and it closes in the upper 1/3, therefore satisfying the rules of a confirming candle, or the 2 main basic rules of a confirming candle. In this case, what we have is a confirmation where we're 19 pips from the low. We would take the entry when we're 15 pips from the low, and that is right here on the candle. Pulls back to about 15.1, pulls back to roughly about 14.7, 14.6 from the low, somewhere in there. So it hit the entry at that point when the bid price is 15 pips from the low. That's where the entry is taken, which means you get filled. If you have a 1 pip spread and the bid price is 15 pips from the low, you're going to get filled roughly 16 pips from the low, and that's where you place your stop and your limit from that point. Would have been a 20 pip stop, 40 pip take profit. Again, this aspect of the entry is mechanical. There's no discretion involved in the entry aspect, as the rules of a confirming entry are purely mechanical. From that point, we got a little bit fortunate. We had a new spike here. A lot of people got slipped and had a couple people with a 50 plus pip take profit, somebody up around the 65 pip mark, which I'm not really sure how that was because it was beyond the spike on mine, but had a wide range of people, some again hitting that 40 mark as well, 40, 41, 42, as it was a 20 pip stop, 40 pip take profit. Because I can't account for positive slippage, because I can't say, okay, this is the standard and say that this is the number. Yes, I could have taken an average in the room, but in the previews, I tend to round down. I tend to take a lower average. As a general rule of thumb, at least I try to. And in this case, I'm just going to call it plus 40 because anything better than that would have just been, a very wide spectrum. And so I can only account for what we actually would have been looking for, which would have been 40 pips. 40 pips, or as we keep track of performance, 4% in this case. So that leaves us with a start to the month of 4%. And let's try and go through these next trades a little bit faster. Next trade that we had was quite a ways over, and it was 3 trades on the 18th here. So we went through a period of time where we had 3 or 4 days after the huge spike on the pound that we had down back here. It really eliminated the pound for us. So that we had that spike on the 7th, only a few days after the first trade on the euro. But that spike, we took off trading on the pound for a few days after that, and it really eliminated quite a few days for us on the pound. Unfortunately, killed a lot of the month on the pound at least. And the pound made up for it, though. Made up for it on the 18th, had quite a few trades. It started off the day with a losing trade, and it was a short on the pound on the 18th from the 1 spot 2262 level. So here's 1 spot 2262, and we'll drag over the preview to show you that date. So here's the preview, and it was October 18th. Pound upper levels, we had 1 spot 2262, which is right there. Again, 1 spot 2262. And keep this in mind, the next level is going to be 1 spot 2318, and that was also a pre-selected point. It's all time-stamped in YouTube's no way to go back and, yes, I could go edit this, but the video is time-stamped in YouTube, no way to go back and edit that. So all pre-selected there in that case, and we go back to the charts, 1 spot 2262, again, first point. We come into that, we get a stop run here. We don't get a confirmation on this candle. Next candle here sets a higher low, therefore higher candle body low, therefore it resets the count. And then number 2 in this case, because the count was reset, confirms. 3 doesn't pull back, 4 does pull back. This candle not only pulls back, but it also stops the trade out. We had some comments coming out here at this point. This month we had both the positive and the negative. We had the euro, which hit a full take profit almost immediately because of some random comments. The pound was kind of the opposite, got hit by that. And I think there was actually order flow at this point. That was an issue. I'm drawing a blank, or I'm kind of confusing two situations. So either way, we had a random event. That's the bottom line. And this month kind of saw the positive and the negative associated with that. So started off there with a 2% trade on the day. That brings us from 4% up on the month down to up 2% on the month. The next trade was off the same level. This is what we term as a backside trade. If we have what we term as a clean break through the level, meaning once it starts to break that level, once you have candle contact with the level, it continues to break through it. That's what we define as a clean break, and to put it in simple terms, or just basic terms, I guess I would say. And then we come into what we term as the backside of the level, the opposite side of what was originally listed, or where the market originally was at the beginning of the day. It was originally an upper point because the price was below it. And now once we're above it, it becomes a lower point, and it's a viable option as a backside trade if we have a clean break. So we get the break earlier prior to the start of the session, but at the start of the session, we're still breaking that level, which is required, and we get a confirmation up at 8 o'clock. So in this case, I believe we had some 8:30 news, and that we had to take the entry on the pullback over here because we wouldn't take it ahead of the news, take it on the pullback. From the pullback, this runs off, hits a full take profit. With that full 4% take profit, that takes us from up 2% on the month to up 6% on the month. And the next level that we had to the upside was 23.18. If you don't remember this point, go back to when I showed you the preview, or actually, you know what? Let me just pop it up here real quick. So there's 23.18. Again, that was the secondary upper point that we had this day, 23.18. And 23.18, we get another basic stop run here. So we get the break. We don't get a confirmation down. Following candle in this case confirms to the downside, and with that confirmation, this candle that we had was a total high to low of about 9.2 or so roughly. So it need to close in about the lower 3 pips, lower 3.1 pips, and it closes about 2.7 or so, 2.8 off the low. So it was within the lower 1/3, and then at the time of that confirmation, you are sitting about 16 pips away from the high. The entry would have been when you hit 15 pips from the high. 15 pips from the high, apply the 20 pip stop, 40 pip take profit. And from that entry, we were up when we closed right around the 5 p.m. session change. We were up right around 15 pips, or 1.5%. And that brings us from 6%, up 6% in the month, to up now 7.5%. The next trade was the following day on the euro. So the following day was the 19th. It was a euro long on the 19th, and the level that we had on the euro was from 0964. That was the level. Now, this trade more than likely wouldn't have stopped a lot of people out, but depending on your spread would have determined whether you got stopped out. With Global Prime and the spread that we use as the standard, it probably would have missed it by a tenth or so. If again, you had the same spread and the same entry point, but because it was so close, I mean, like I mentioned at the beginning of the day, I try my best to round down on the numbers if something is that close. And in this case, because it was so close, I'm counting as a full loss. Basically, we came into 0964. I believe I showed you that level, but let me just do that again. If I didn't, actually, no, I didn't. So here is the lower level on the euro, 1.0964 for the 19th. And we came into 1.0964. This is kind of a unique situation because you get the original stop run here, but the confirmation candle actually sets a lower low. So now we have to get our stop below that low, and it confirms. And at this time here, we're still using what we term as a dynamic stop. I'm not going to get into too much detail on that because it would take a while to explain, but the point is, essentially, just to simplify it, we're measuring to the low. It's 9 pips away. We would add 5 to that, and that would give us a 14 pip stop. That would put our stop loss 5 pips below the low minus the spread. So whatever your spread was would have been 5 pips below the low. If you have a 1 pip spread, that would put the stop 4 pips below the low. But the point is, came back, would have got within a tenth or two of the stop as far as our standard, which is global prime. Because of that, and because it was kind of a toss-up in that situation, it would have made it, spread would have made the difference from broker to broker. I'm counting as a full loss. That takes us from 7.5% up on the month up to, or down to 5.5% up on the month. Final trade of the month was on the 20th, and this was the euro, or it was on the euro, so it was the next day. Had 3 kind of in a row. There are actually 5 trades within 3 days, which was strange. It's like a lot of the trades all got packed into that 3-day period. But the trade that we had was a long on the euro. It was from 09.55 again on the 20th, so we'll drag this up here. And that lower level was 1.0955, so you can see again pre-selected point there on the euro. And 09.55, if we drag this down to that level, this was kind of fortunate on this day because we had an exact break. So we need at least a 3 pip break of a level to initiate a stop run. This candle breaks down to 09.52 even. So it's exactly a 3 pip break. That's the minimum that we need. It gives us that 3 pip break. Next candle confirms up. The entry would have been taken immediately at the close of the confirming candle because you're only 9.5 pips away from the low. So you're already within the target area. Within 15 pips, that is, which would be what I term as the target area, 15 pips or less. And the entry be taken right at that point, gives you the entry, runs off, and the trade would have been closed out prior to the news that we had later in the day. And we were up right around 30 pips at the time of the news coming out. Yes, this would have spiked up and continued to give us a full profit, with the news spiking up. But the point to really keep in mind here is that spike could have just as easily gone the opposite direction. That's why we avoid major news, as you just don't know which direction you're going to see the spike. And so in this case, at the time of the close, depending on exact close here, because it would have been only a 14 pip stop, actually probably 14, 15 pip stop, 30 pip take profit. In this case, you were up right around anywhere between 18 to 25 pips would have been roughly where where you were sitting, and that's why it was counted as a 3% trade, taking the average in that situation. 3% of that, or 75% of 30 pips, essentially is what it would be if you take this. 30 times 0.75 equals 22 pips, and that was near the average, and therefore we're calling it a 3% trade. That takes us from 5.5% up on the month to 8.5% total, and that is our total for the month of October. The next video that you're going to see is going to be a combination of November and December, because December was a half month and both November and December were really relatively slow. So I'm going to combine the two because it was a half month for December. And again, this brings us to a total compounded gain of 356% on just the euro dollar and the pound dollar, using 2% risk per trade. As a summary, 66% win-loss ratio with an actual reward to risk of 1.56 to 1, or rounding up 1.6 to 1, and that was the total for this month, for the month of October 2016. All right, I hope you enjoyed the video. If you have any questions, you can feel free to visit www.daytradingforexlive.com. A ton of information on the site, guys. There's been information created over years on every sort of topic, as well as detailed explanations of the strategy. There's a lot of information that walks through what the confirmation entry is. You hear me talk about it here, and I'll get people asking me, well, what is the confirmation entry? There's videos on that walk through the confirmation entry. There's videos on kind of theory behind the strategy and aspects like that you can start putting to work, going through whether you're a member or not. If you are interested in learning the bank trading strategy, feel free to check out the course page. Send us any questions you have on that. It walks through what's actually included in the membership, the live room, the members chat box, the daily market preview videos, the videos that I was showing you where we pre-select those levels. So you're actually getting those levels in advance in addition to that video. That's about 10 to 15 minutes long as an average on a daily basis. Obviously access to the course as well. So If you have any questions on that, feel free to shoot us an email, support@daytradingforexlive.com or daytradingforexlive@gmail.com. I'll get it either location, and be happy to field any questions that you guys may have. That will do it for the October video. See you guys back for the next video. Until then, happy trading.